Hello, and welcome to another episode of the Profit Minds podcast. I'm your host, Dr. Stephen Kirch, creator of the Profit Minds Growth System, a unique blend of profit growth, productivity acceleration, and building robust business process for scale. In every episode, I interview entrepreneurs and small business owners from around the world with a unique story to tell. You can find the show on YouTube, LinkedIn, Apple and Google Podcasts, Stitcher, Spotify, and more. Well, hello, everyone. Today, my guest is Adam Bergman, a tax attorney and founder of IRA Financial. And today, we're going to talk about how to unlock the power of self-directed IRAs for entrepreneurs. Welcome, Adam.
Steve, thanks so much for having me.
Yeah. So, the story that I always tell, or the question that I always ask is, to tell me your story. How did you get to be, you go from tax attorney to this founder of IRA Financial? What's that story?
A little bit of good luck, honestly. So I think I do have an interesting story, and I think it could be maybe a good example for some entrepreneurs that have this potential landing spot. You just gotta go for it. So I was a tax attorney in New York. I worked at some of the largest law firms in the world, and I was an 8th-year associate. I liked practicing law probably for the first 5 years. It was fun. After that, it got kind of tedious. It was a lot of the same deals, transaction documents. So I was always trying to figure out what's the next step. I didn't think I wanted to be a lawyer the rest of my life. I just never kind of knew what I wanted to do. I just looked at a bunch of different business ideas, and it just nothing really made sense to me. So I actually had a client. It was a hedge fund client of the firm's, and the tax partner I was working with asked me to do some research on as to whether this client was able to use his IRA to invest in his hedge fund. And I remember thinking to myself, that's probably easy. I doubt you can do it. It's like I'm a smart guy. I'm pretty sophisticated. I have a law degree. I have a master's in tax law. I worked at big firms. I believe you can only use your retirement account to invest in stocks and mutual funds. So probably a simple answer. And at that point, this was 2008. We actually had a law library, believe it or not, in this big, it's hard to believe. They took up this law firm literally took up a floor in New York City rent for a library. So I found like one treatise on retirement accounts, and lo and behold, I discovered that yes, the IRS, when IRAs were created back in 1974, Congress allowed Americans to invest their IRA and 401k in not just stocks, but also alternative assets like real estate and private equity, real estate funds, investment funds, gold, and so on and so forth. So I was blown away. And I remember looking around, and the industry was pretty, I would say it was not mature at all. Companies were charging a lot of money to set this up. I actually set one up. I used a competitor of mine today to set one up because I wanted to kind of see how this worked. I had a former employer 401k, and I couldn't believe it. It took like 3 weeks to set up. The people didn't know anything. They didn't answer any of my questions. It was just expensive, no technology. So I'm like, I think I found what I want to do. I think I can use my tax background. I can marry it with something I truly believe in, which is, taking control and doing what the IRS wants you to do, and just kind of being able to prophesize it to more Americans. So I left my job in '08. It took me a little while to kind of raise some money, start the business. And by 2010, IRA Financial was started. And fast forward 15 years, we have over 25,000 accounts and over $4.5 billion in assets. So it's been the best decision I ever made. Just kind of God gave me an opportunity, and I just literally took advantage of it. I was lucky.
Yeah. Well, that's really interesting. So going from, this investigation that you had, a client just wanted to find out a question, going from there to building an entire business around the answer to that question, that's pretty amazing.
The best advice I ever got, I had a friend whose dad was a very, very successful software businessman. And I would talk to him and say, listen, I don't know what I want to do. I know I want to do entrepreneurial business type ventures. I just don't know what I want to start. And he said, okay, tax law, Adam. So if you decide to start a furniture business, there's 1,000 people that know more than you, and it's going to be awfully hard. But if you start a business in the tax world, you're going to start at the top because your competitors are probably going to know less than you. So that's got me thinking, and that was maybe 6 months before I discovered and tripped on the self-directed IRA world. So that when I kind of put it together and took that advice and then found the ability to do alternative assets in an IRA, it's just like a light bulb went off my head. And I was like, I need to do this. And I did it.
Yeah. Yeah. So I mean, similar to my story, right? Where, you know, I was a PhD physicist working at Intel, but I discovered a real passion for teaching people how to be productive. But
Mhm.
I'd spent 15 years of my time at Intel studying productivity and becoming more productive and teaching people about productivity. And so when I launched my, you know, productivity coaching business, yeah, I knew more than most people.
Yeah.
So that's a real advantage.
Yeah. Yeah, it's the best advice I got. There's so many people that want to start businesses and want to do something, and they kind of jump into something they have zero experience in. And it's possible you can do it, but it's very hard versus
Yeah.
kind of morphing into something you have a background and experience in. You already have that pedigree and already have the credibility that's much easier to navigate because it's hard to start a business.
It really is. So are there things that you can't do with the IRA?
Yeah.
In other words, the investments that you can't make or money places that you can't put the
Mhm.
money?
So there's really only three little small things you can't do with an IRA. And here they are. Number one, you can't buy life insurance. You could in a 401k, just not in an individual retirement account.
Okay.
And just real quick, let me just double click on that. So what's an IRA, right? IRAs were created by ERISA in 1974. It's an individual retirement account. Anyone with income or anyone that has a employer 401k that they now want to move over and transport to an IRA can set up an IRA. In 2025, you can put away 7,000 in an IRA or 8,000 if you're over 50. And of course, that money could grow into an unlimited fashion. The two big advantages of doing an IRA is you get a tax deduction for the money you put in, which reduces your tax liability. And number two, the big benefit is deferral. Your money grows without tax. That's the foundation of compounded returns. The concept of 72, assuming an 8% rate of return, your money doubles every 9 years. So when you kind of couple those two features, you can see why there's $17 trillion in the IRA world, over 65 million IRAs. So going back to what you cannot do, you cannot buy life insurance. Number two, you cannot buy collectibles like artwork. And thirdly, you cannot do anything in your IRA that in any ways directly or indirectly personally benefits you, your lineal descendants, your parents, your children, spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such person. So what does that mean? Can't buy a house and live in it. Can't take your IRA and buy yourself a watch. Can't take your IRA, buy yourself a car. Can't take your IRA, take your family to Hawaii. Otherwise, you can do it, right? You can buy real estate and flip it to a third party. Brothers, sisters, aunts, uncles, cousins are not related. You could invest in private equity, venture capital, can do domestic or foreign real estate, gold, cryptos, you name it, you can do it. Other than those three categories of investments, you can do it.
Yeah. So you can take money, and I've heard of people doing this. You can take money and invest it in a business.
Yes. So let's talk about it, Stephen. So generally, when you invest in a business in your IRA, remember there's three things you can't do. And the third category says you're not allowed to invest your IRA in a business you own more than 50% of, you or a lineal descendant. So if I was going to own more than 60% of a business, my IRA technically cannot use it. But there's a workaround called the ROBS, a Rollover Business Startup solution. I wrote a book on this about 6 years ago, 7 years ago. And basically, instead of an IRA, use a 401k. And instead of an LLC, use a corporation. And there's an exception in the tax code without getting into the details, which allows a 401k to buy corporate stock, which circumvents the prohibited transaction rules I just mentioned. So yes, if you're going to own more than 50% or a family member is, then the ROB solution is a great vehicle. If you're going to if you're going to own less than 50%, then you can use your IRA to invest in a business, which is what Peter Thiel did when he used a Roth IRA to invest in PayPal and Facebook, and he turned that into a $5 billion Roth IRA.
Yeah. Yeah. So, and obviously you can take a distribution from your IRA and do whatever you want with it. But
Right.
what you're saying is if you want to leave the money in there and allow it to continue to grow tax deferred,
Mhm.
that can't, those are the three things that you can't do and leave the money in the IRA.
Right.
Right. You just,
So Exactly. So I'll just kind of expand on that. So you're exactly right. So if you pull money out of a traditional IRA before 59 and a half, you pay income tax and 10% penalty. If you pull it out after 59 and a half, you pay tax. And then at age 73, you have to take out around 3% of the value, and that's called the required minimum distribution. But what I didn't touch on before is there's something called a Roth IRA. And that was created in 1997 by Senator
Mm-hmm.
Roth of Delaware. And unlike a traditional IRA where you get a tax deduction for what you put in a Roth IRA, it's an after-tax account. So you do not get a tax deduction, but here's the catch. So long as you're over 59 and a half and the Roth's been open at least 5 years, whatever you pull out, it's tax-free. So that's what Peter Thiel did, who's, a brilliant guy. And he took in 1999, he started PayPal with Elon Musk and a few other founders. And because he owned less than 50%, he took less than $2,000 in a Roth IRA, invested in PayPal, and within a few years turned that into around $27 million tax-free. And then he took around $500,000. He was the first investor in a Facebook, and he turned that into around $450 million tax-free. And Peter Thiel right now is around 58 or so. So he's got to wait another year and a half. But when he does, he's going to have billions of dollars tax-free.
Wow.
Yeah.
So, let's talk a little bit about entrepreneurs, small business owners. What are the kinds of things that you do to help small business owners reduce their tax?
Right. So the first thing is saving. So there's something called the solo 401k, which I've written 2 books on it. A solo 401k is basically a souped up step IRA. So what is a solo K? It's basically a 401k that you would get if you worked at Intel or Oracle or Apple, but it's even more powerful. Why? Because if you're a business and it's just you or your spouse or a business owner, so as long as you don't have any full-time employees that work more than 1,000 hours, you could set up a solo K. And what the solo K does is if you're under 50 years old, it lets you put away $70,000. If you're over 50, you can put away 77,500. And if you're between 60 and 63, you can put away around 82,000. Now you can do that in pre-tax or Roth. You also could invest in traditional and alternative assets like real estate or invest in your own business. And on top of that, there's a loan feature that lets you borrow up to $50,000 tax-free, penalty-free from your plan and use that for any purpose, including funding a business. So it's a very robust plan. It's safe. You get an opinion letter from the IRS, and you have so much flexibility from a saving and an investing perspective.
But you said that's basically for solopreneurs, right? People who are basically own their own business and don't have any employees.
Correct. That's exactly right. Now, if you have employees, you can set up a 401k or something called a cash balance plan, depending on your goals and your age. For example, a regular 401k is great because you can offer your employees the ability to save, which is 23,500 if you're under 50, 31,000 if you're over 50, and that you can do as well. And if you are probably in your mid to late 40s up, and you're looking to put away over $200,000 a year, you can potentially do it in what's called a combo cash balance plan, which combines a defined benefit plan with a 401k profit sharing plan. And that's something we also have expertise in. And that is a very, very powerful, robust savings tool. It doesn't let you do entrepreneurial investments because it has to be tied, really, generally should be tied to traditional investments, but it gives you a huge, huge saving opportunity.
Right. Would you recommend then for people who anticipate the possibility of maybe taking some of that money and doing some kind of investing, like buying a business or investing in a business, would you recommend that they have 2 different accounts for that kind of thing?
Yeah, I think you have to look at your goals. So if you are focused, let's say you worked at Intel, and sorry to pick on Intel, but it's a great company. So you leave Intel, right? And you're like, you have $300,000, let's say, in a 401k, and now you potentially want to kind of find your next chapter, and you want to invest in a business. In that case, yes, I would set up a ROBS, a Rollover Business Startup, which employs the use of a 401k and a corporation, and that's easy to set up. It's not super expensive. If you move from Intel to Apple, then what I would do is probably open an IRA. I would move the $300,000 in this example into a self-directed IRA, so you can do alternative assets or stocks and do whatever you want. and then continue saving in an Apple, 401k, because the 401k is a great vehicle to save. Um, so those are really the two options. If you want to use the 401k as an investment tool to build a business, it's the ROBS. If you just want to do cool investments and have the opportunity to invest in alts or stocks, an IRA or self-directed IRA. And then if you're going to continue working in corporate America or just at a job with a 401k, then continue saving through the 401k.
Got it. Okay. Um, what are you doing in terms of these days? Because everything is so volatile, right? With not knowing what's going on with tariffs, and then there was the war, and this or bombing of Iran, or any of those kinds of things. What are you doing what are you telling your investors to do to deal with their anxiety and the whole market turmoil that's going on?
Yeah, I think that goes to the whole nature of what a self-directed is. The beauty and the irony is that you don't have to worry about a market turmoil or a kind of a blow up in the market. Why? Because it's based off the power of diversification. The beauty of the self-directed IRA is you don't have to put all your retirement money in the equity markets, and that's what unfortunately a lot of people are doing. And if you look at the S&P 500, it's not 500 companies; it's really 7 to 10 companies that make up most of the gains in the
Right.
S&P 500, right? So, or maybe it's 20 companies, but we're really not diversified. So the self-directed IRA, the beauty of it is you get to do things like real estate or gold or cryptos or private equity or venture capital or any other private businesses. So if you look at the great businesses in America, 80% of the businesses that have over 100 million in revenue are private. So that means if all you're doing is investing in publicly traded stocks and mutual funds and ETFs, you're losing out on the opportunity of investing in 80% of the great companies in this country. And that's what the self-directed IRA does. It lets you invest in private businesses. So like for me personally, I have close to 60% of my portfolio in alts. And I feel great about it because it's not alts where I'm investing in, Venezuelan real estate. It's alts like I have money in gold, I have money in Bitcoin, I have money in US real estate, I have money in private equity and venture capital. And then I also have money in the equity market. So if there is, trade wars or some type of foreign uh, venture, it doesn't bother me because I'm so well diversified.
Yeah. Yeah. So when you say alternative investments, you listed a whole bunch of different things. How do people find out about what the kinds of alternative investments that they should look at or think about or research?
Yeah, it's a great question. So really the definition, what's an alternative asset? It's anything that's not publicly traded, right? So real estate's a great example. So the beauty of the self-directed IRA is you have the total sense of freedom and control. You get to pick what you want to invest in. IRA Financial doesn't pick investments. We are a company that unlocks people's retirement money. So our clients come to us generally and say, "Hey, Adam, I want to buy a house, 123 Apple Street, or I want to invest in my friend's business, or I want to invest in SpaceX, or I want to invest in gold or Bitcoin or private equity or whatever it is." We help unlock your money in a tax efficient way, help you structure the investment, and allow you to take control so you can better diversify, hedge against inflation, invest in hard assets, and ultimately have a better performing retirement portfolio. Because if you look at the Forbes 100 list, the richest people in the world, they're in alts, okay? They're in private equity, they're in venture capital, they're in real estate, they're in private businesses. It's very rare that you're going to find someone who's in a top 100 Forbes list that just sits back and picks stocks. Even Warren Buffett, he buys businesses. Okay, he doesn't just pick stock. He sits in cash, he buys businesses. And whether they're private or public, that's what he's doing. So that is what people are looking at with a self-directed IRA. They're not putting all their money in buying, Bitcoin, but they're taking a percentage to diversify, get exposure to emerging assets, and generate real alpha for their retirement account.
So the primary purpose of IRA Financial is to just to help people, to facilitate those transactions, right?
Exactly. We're not a fiduciary. We don't give investment advice. We're not Fidelity or Schwab. We are a partner. So clients come to us and say, "Hey, I have $100,000. I want to buy the house next door. I want to invest in gold or Bitcoin or my friend's business." help me do it. So they open an account with us. You can do it online through an app. We then initiate the transfer. So we pull the money tax-free from Fidelity, Schwab, Vanguard, wherever it is. When the money hits, they're notified. Then they go on our app. They tell us where to wire the money. We send it. We do all the IRS administration, all the reporting, record keeping, and they can sit back and enjoy investing. And it's very inexpensive. You're talking about less than $500 a year flat. You can invest 50 grand or 50 million bucks in almost anything you want.
Okay. Yeah. So that's a very different, so how do people find out about you then? What's the, because, people know about Schwab and Fidelity and all of that kind of stuff. So what's the,
Well, we do our best to you'll get our name out there generally online. I've written 9 books, so people generally find us. We have I've done 1,500 videos. We write blogs, daily. So there's tons of great content. People will Google or use AI and ask questions, and they'll find our company. But our goal is to become the vanguard of IRAs, right? Ultimately, we're working on a partnership with Interactive Brokers, where in the next several months we'll be one of the first companies in the country where retirement investors can invest in stocks and real estate or cryptos or private equity all in one platform for one low flat fee. So we're trying to broaden the investment opportunities for Americans so that they can take more control transparently and within full IRS compliance and do it very easily.
So if somebody wanted to reach out, what's the best way for them to get in touch with you?
The easiest way is go to our website, IRAFinancial.com. There's great information. You can also, I would suggest really checking out our YouTube channel. There's, like I said, 1,500 videos, some short, some long, some fun, some boring. If you want to get into the investment stuff or just want to learn about the basics, you can pick and choose at your leisure. If you can't sleep at night, you may want to check it out if IRAs bore you. But I think they're exciting because this is how smart people get rich. The retirement system's literally rigged in our favor. Why? Because it's based off compounded returns. Your money doubles every 8 years, assuming a 9% rate of return. We all can be tax-free millionaires. It's not a zero-sum game. We all can do it. We just need to understand how the rules work, and we can do it.
Okay. Well, thanks so much, Adam. Thanks. It was just wonderful chatting with you. To all our listeners, thanks for tuning in. I hope you learned something about alternative investments, using your IRA, leveraging that power of the retirement account to do a wide variety of things. I know I did. Thanks for watching. You've been listening to the Profit Minds podcast. This is your host, Dr. Stephen Kirch. Please visit www.profitminds.net for other episodes or to contact me. Thank you for your positive feedback, comments, questions, and for sharing this show with others. Thanks for listening. Have a grateful day.